All right, we're going to get started. So, welcome back to the channel. It's your boy, King Quasi. Thank you all for pulling up to my live. Sorry we're a little late, but guess what? We got a good one for you today. Make sure you're coming in and you're hitting that like button. You're clicking that subscribe button if you're not subscribed already. Listen, don't be late like I was, because I'm going to give you a check. Remember, you don't want to get checks. We don't want to get checks. But today, I got a good one for you. I got my homie Rima here, and we're going to be talking today about how to build wealth. But we're going to have a little spin to it, right? Because, Uncle Sam always got to get his money. He always got to get his piece of the pie. So we got Rima here who's going to give us some insight into things we need to be thinking about as we are investing, the pros and cons. And that's going to help us make some really strong financial decisions in our lives. So as you come in, make sure that you are hitting that like button, hitting that subscribe button, sharing this stream with everyone on your social media so they can come in here and learn with us. Without further ado, I want to first introduce my homie, Sarima. Listen, Sarima and I go way back. 2008 back. Jerry curls and Abercrombie and Fitch, Hollister clothes, way back. Feel me? And so I want to share a really quick story between me and Rima. Listen, I probably like the first week at Plattsburgh where I went to college. I'm eating in the cafeteria by myself. I don't know anyone. This is a whole new world to me. I'm eating by myself. And off to the corner of the dining hall, Wilson Dining Hall, it was Sarima and her friend Stacy eating. I saw them look over at me, not even trying to holler at anything. I saw them look over at me, and they welcomed me in. They were like, hey, you want to eat with us? Listen, she doesn't know this, but that for me was a very critical moment in my life. Because remember, I'm coming from Guyana. I'm being socialized in America. I'm going off to college. None of my family members have ever went off to college. I'm lost, feeling scared, lonely, all of those experiences that come with starting college. And they welcomed me over. They gave me a sense of belonging, feeling like, I'm worth it. I belong. I just really appreciate that. And so over the years, Rima and I, listen, we don't miss a beat. Feel me? I came back from Plattsburgh after graduating. She did end up going to SUNY Albany, and did come back to Albany. We met up again. And it was in that time, she was ahead of the curve. Listen, it was at that time I was having a conversation with Sarima, and she was already thinking about building wealth. She was already thinking about financial literacy. In 2013, this is me coming out of college, right? And so here we are. How many years is this now? 8?
Almost 10 years.
Almost 10 years. Yeah,
yep.
Right? And I'm just getting started.
It's never too late.
And that's what I said. In my first video, you remember I said, you're not late. It's never too late. And so today we want to talk to you about building financial wealth. And so, Sarima, can you first just introduce yourself, tell us who you are, and so we can get started for the day?
Yes, of course. Thank you, Quasi, for having me on your channel. And hello to all of Quasi's followers. He is doing a phenomenal job. I love that he is definitely representing and breaking down stocks, because we know he has a great knack of education and breaking it down so that it is easily understandable for everyone. And I love the channel already, and I think you're doing great work, and you have come a long way. And oh my gosh, back in Plattsburgh 2008, we were just welcoming. We were just, me and my roommate, we were just very silly. We were just like, let's just be friends with everyone. And that was just the vibe. And that's always been the vibe. And, that's how you just continue to have positivity in your life, because it's important. But not to draw on a long story, I am the owner of TrTaxprep, based out of New York State. So my journey has been ever since I can remember. So my father's background, he was an auditor and an accountant. So that is pretty much what I grew up around and knew. And, you know, it's a very important field to be in and to have representation, especially as, you know, minorities, as women. It's important to know how to handle your business efficiently and not get caught up, you know. So he had his business for many years, and I just followed in his footsteps. So here I am, 8 years in the game. I worked alongside my father. I learned from the OG himself that knew all of the ins and outs, the tips and the tricks. You know, I used to take notes. So, you know, it was just in my household. And so I do personal taxes and business taxes for my clients. And my whole motivation is that, you know, where we live, we have to be real about, you know, the country that we live in. It is based on money. But you need to be able to learn how to navigate your money in an efficient way and make sure that you are doing the right thing, because you also don't want to get caught up in, you know, IRS audits and things of that nature. But taxes is nothing to be afraid of. Once you get the right guidance, you should be good to go.
Yeah. I love that. And I didn't know that information about you. I didn't know that your father was also in the business. So now, how do you build financial wealth? So what are because there are many different ways for us to really get the bag.
Yes,
So
yes, definitely. So, I mean, you can do it in many ways. You know, no way is too small. So, good bank accounts. If you're scared to do anything, at least get you an account that gives you some kind of interest. Don't go for the ones with the 0.01%. You know, that's just disheartening and disrespectful at times. You know, try to get, you know, a higher percentage rate, interest rate account if you could. Also, the one that I love is real estate. Real estate is also a great way to build financial wealth in families and have that long standing, you know, so rental properties. I know a lot of people have been getting into Airbnbs and things of that nature. And Quasey's favorite, stocks, right? So the stock market is a great way to build financial wealth, especially if you know what you're doing, you know, and if you don't know what you're doing, that's why you're here. You joined the channel. You can learn a lot from Quasey, and just being careful, you know, not being fearful of the market, just understanding what you're doing or trying to understand what you're doing, and you should definitely be fine. Also, you know, side jobs, having a great budget, you know, making sure you are still in control of your money and knowing where it is going and filtering into. And, you know, if you're not investing, my motto is, if your money is not working for you, then you will always be working for the money.
that's a fact.
So you need to figure out a way as to how you can have your money growing and doing things for you. So that's why investing is a great tool to build financial wealth, because, you know, you can pass that on. It becomes generational wealth if you do it right.
Yeah, no, I think you hit the nail right on the head there. You know, I've been getting into the real estate, and I'm not deep in there yet, but no, I'm getting into the real estate. And you know, it's almost like you knew what my next video was going to be about, right? Because you just touched on a lot of those things, but I ain't gonna give it away. I'm gonna give it away and make sure everyone pulls back up for the next video. And so no, I think those are some really, really great tips. And again, a lot of those I wish I knew before, right? So now the channel is all about investing in stocks and crypto and building financial wealth that way. What does that have to do with taxes, right? Like, what should people know about their taxes if they decide to invest?
Okay, so if you decide to invest in the market, or, you know, they are called capital gains if you make money out of the market. and you have to claim those on your taxes. So usually you would get a form through the platform that you use, whether that's Robinhood, TD Ameritrade. They will send you a form that you have to file for your taxes. So a lot of people, they get, nervous because of the percentages on how much they might get taxed. There's a difference. There's short-term gains and then there's long-term gains. So when it comes to long-term gains, those are asset stocks that you held for longer than 1 year. So those are the more preferable tax rates because, who wants to spend, more money on taxes than they need to. So it's usually 0%, 15 or 20%, depending on the asset, but it has to be at least 1 year. I usually say, they always say 1 year and a day. So you're sure you got the 1 year in, right? And you don't, slip off or fall off, like, oh, nope, you got 364 days, so, and then you have to pay the short term, right?
Yeah.
So it's really petty, like very petty like that. It has to be to the T. So short term is, people that, in regards to stocks, it could be a stock that you held on for 2 months, 3 months, or if you're doing options, sometimes that market moves really fast and you have to pull your money out. And you could be taxed up to 37%, and it's based on your income. But I always tell people, if you know what you're doing in the stock market, it should not matter you getting taxed 37%, because that $5 you made is $5 more than you would have had, right? So the fear of, short-term, long-term, I don't want to get taxed on this and that, you don't worry about that. Just invest. Make sure you know what you're doing. Be confident in what you're doing. Sometimes you will have losses, which is okay. There's also brackets for things like that. You speak to your accountant or whoever prepares your taxes to prepare you for those losses and, make up for things of that nature. But as far as the percentage on what you'll have to pay, people shouldn't be fearful of that, because it's every transaction we do in America, unless it's under the table, so I have no clue, what people usually do. Anything legit, it will be taxed. So it shouldn't, don't put your mind in a mindset of, oh man, I'm going to get taxed 37%. I'm not going to do options, or I'm not going to do short-term stocks, or, Apple is hot today. It shot up $30 tomorrow. I don't want to sell it, and you probably made, let's say you invested a good amount and you made $3,000 in one night. You're going to let 37% scare you?
Yeah.
And then hold it, and you end up holding the bag, and then it goes back down. I'm sorry, holding the bag means, the stock might depreciate and not be worth as much as it would have been if you just sold it when you thought it was the right time to sell. And you don't want to get caught up with that, because now you have losses or potential losses when you could have just took the $3,000 gain and just paid the tax percentage on that for the short term. So, a lot of people always talk about that. And during the pandemic, when people were like investing, I'm like, just invest, go do it. If you think you know what you're doing, go do it. Like, don't be fearful of taxes. We'll figure it out. And if you can't figure it out, I can figure it out for you.
That's a fact. That's a fact. That's why we hire you, because you got all the ins and outs of it, right? The intricacies of doing taxes, and know what will work for the clients and will work against the clients, etc. So now, are losses, like if you lose a lot of money in the stock market, can that help you when you're filing your taxes?
So you can claim up to $3,000 of loss, right? And then everything else would be pushed for further years, right? So, you want to win, because that's just in your benefit. But, as somebody now starting out, of course, losses are going to hurt a little bit, but you can claim that on your taxes up to a certain amount. It's not an infinite amount. You can't claim, forever. Like every loss, the government does not care. The stock market is not the casino. That's what we have to understand.
Yes.
You need to understand it's not the casino. You can't be out here like, oh no, I'm about to go back in and hit the slot machine. No, like you have to be careful. You have to limit your loss, and you also have to, when you're investing, invest what you can afford to lose. That's a thing too, like, because if you lose your money, just make sure you're not, cutting out on some groceries or your bills, or you're about to get put out your house. Make sure that's why budgeting is important, because when you budget, then you can put aside, I'm going to invest this in the stock market, and I'm okay to lose that. You have to have that mindset as well, right? And then the next mindset is, all right, we're going to win, and we're just going to do what we have to do the right way and pay the taxes. Don't be afraid to win, and also be able to take the losses.
Yeah. No, listen, you just dropped some gem. The stock market is not a casino.
No.
It's not a get-rich scheme. And I said that in my first video, too. I know you've been watching, Rima. I know you've been watching. Listen, this is not a get-rich scheme, right? A lot of people think, oh, I'm going to put my money in there and I'm instantaneously going to make thousands and millions. That's not it. It's a long game, right? So let's think about 5 years, 10 years, 15 years, 20 years down the road. Yep. The decisions that you're making today, you want to be able to see that pay dividend later on, right?
Yes.
And,
yes.
It's so interesting. See, I don't know if you can see in the background, I have a bunch of plants. Now, one of my favorite plants, I saw it dying. And the leaves would dry up, and it just really hurt me. But I kept the light on it. I kept watering it, kept nurturing it. I kept investing time and energy into this plant. And yesterday, I'm doing my daily look. I'm always looking to see if there's any change. I started to see the stem start to sprout out. Right? Nice. And then I went around to all my other plants, and I was able to see new growth. And that, for me, is an analogy to the stock market. Right?
Yep.
The decisions you're making now, you're not going to see it go in your direction that you want it to. But over time, when you look back, you're going to start to notice the decisions I made 5 years ago, 2 years ago, last month, last week, those decisions, you're going to see it pay dividend, and you're going to be happy that you invest. So do me a favor. I see some people in the chat right now. What is the best way to invest in a volatile market? Now, as I mentioned before, we know financial advisors, right? But we just try to make decisions that's going to make us wealthy down the road. So,
yes.
So Rima, do you want to give a shot at that, or do you want me to chime in with that?
Oh my gosh, a volatile market. So, if you have shares of stocks, right? And they're going down, do not panic and sell. Right? So, Tracy, yes, we are not financial advisors, okay? I have a financial advisor that I pay, right? To make sure things, because, I like to play in the stock market, but I also have a financial advisor that, handles some of my money that I want to make sure I don't play with, right? Yep. But let's say you do have stocks. Do not sell them because you see them in the red right now and you are confident in that company, right? And, right now is a very shaky time. It's kind of like when the pandemic hit and things were cheap. It was unbelievable. I can't even think of a stock that, I just racked up on a whole bunch because it was just wow, this is on sale, right? And then when they went back up, it's yes, we're winning, right? So the market goes up and down all the time. Right now, it's down. I've been seeing my Robinhood is red. So me personally, I have not been messing with the short-term kind of investments. I'm not messing around with the options right now. I'm just all right, well, I'm just on vacation right now because, I have my normal, thing that I do. I do my accounting, I do my tax prep, I do other things to make income, right? So that's I'm not dependent on the money in the stock market to be chasing. So maybe Quasi will do a video. I don't want to take all his video ideas and be telling you guys all the information. And my bro gotta have his videos for the future, right?
That's a fact. That's a fact.
Come back. So that might be the next topic he does. How do you invest in the volatile market? That would be a very good, topic to expound upon, because it can be nerve-wracking. But my one tip is, if you have some solid companies in your portfolio right now, I would say don't worry about it. Right?
Yeah.
Because there's really nothing you can do. If you pull out your money, though, and you're in a deficit now, it's going to be tough, because you just lost that money.
Yeah.
And that's never the move. Never the move.
Yeah. I really like that question, and thank you to the person who wrote that in the chat.
Yeah.
Herman, yes, thank you for that question. So here's what I'll say that I'm doing, right? Because I ain't no financial advisor. What I'm doing, first and foremost, it's the mentality, the mindset that you got to get right, right? We're not investing in stocks. We're investing in companies. As I mentioned, if you believe that we're investing in stocks, then it's something that you can throw away. But if you believe that you're investing in companies, when you buy a company, start a company, that's not something you're willing to just throw out on Thursdays when the trash man comes, right? It's not like that. So we're investing in companies. That mindset is really important. So build that mindset of and understand what you're doing in the stock market by learning, by reading, by watching other YouTubers, by subscribing to the channel if you haven't done so already, right? Now, also, I want you to think of, saw that. Anyway, I want you to think about it this way. The day after Thanksgiving is Black Friday. What do people do on Black Friday? They go out and they get the good deals. Yep. That is what's happening right now with the volatile market.
It's on sale.
And it's on sale, right? You should be lining up at your broker, like Robinhood, which the link is going to be down below. And Webull, link down below. Coinbase, link down below, right? You should be buying more. It's called dollar cost averaging, right? If you bought it here and now the stock price dropped, you can now get that same stock or company at a cheaper price, right? And you could potentially get more for the same amount of money that you invested initially. So by buying more when the prices are low, you're bringing down essentially the average price that you paid for that company at that time. Now, it's probably going to go up. Again, you keep buying because we're buying a set amount at a certain particular time, right? Dollar cost averaging. Maybe every 2 weeks you get paid, you take $50 and you say, I'm going to invest this $50 because you're not overextending yourself. Maybe you get paid monthly and you're setting aside $500 and that's supposed to last you for the whole month. And you break that $500 into little chunks. And this week you might invest a certain amount. Next week you invest a certain amount. Next week, and so on until your next check comes in. So what I will say is keep investing. Like Rima said, don't worry about your account looking great right now. Use this time to accumulate as many shares of that company as you can. Because after the Russia invasion, once this clears up, after the interest rates, after inflation gets under control, once those things happen, guess what? You're going to see the stock market start going up. If you look at the charts of the stock market from the inception to now, you'll see, you could just draw a line and see it going up. You can look at any 10-year period and you'll see that it's going up. Now, there's going to be time where there's high volatility, where the stock prices or the stock market is going to go drop and come back up, drop, come back up. But that's a part of investing. There are going to be some good times. There are going to be some times where it's not so good. But remember what you're doing. You're investing in your future. You're building financial wealth, right? Now, I have one more question for Rima before we get out of here.
Okay.
And that is, how can people get in contact with you?
Okay, yes. So you can reach me by email. I think Quasi will put my card up somewhere, but you can email me at TrTaxprep. So that's T as in Tom, R as in realty, tax, TAX, prep, PREP at gmail.com. Or you can like shoot me a text or, a phone call. Like I said, I think the business card is up here, but my number is 919-283-2629. I am still accepting appointments for new tax clients. We love you here. I always try to work with the clients. I know some people's budgets are different. So because I love what I do, I don't charge those exorbitant prices that you normally get at, your local tax preparer office.
Thank you very much. Thank you for coming through, Sarima.